Hey guys, today is Wednesday, May 19th. I don't know if any of you read in the comments, I took today off because we got a heat wave up here. It's like plus 32 today. That's like 90 degrees Fahrenheit. And we had snow a couple of weeks ago, so that's Canadian weather for you. Anyway, I took the morning off to put the air conditioners in. Like, we got an old house, so most of the air conditioning is handled by window units. But I did take a little break after I got the air conditioners done before I come out here. And I opened up the charts and I couldn't help myself. Problem, the audio wasn't on. I had the phantom power off on my microphone. So you can see that roll in the background here. I'm sure it was a successful trade, so that's good. But not so much commentary on that. Anyway, we'll try to make up for that with the Q&A later. On the way now. Good thing this old truck's got ice cold air, because it's hot out. Our streets are just awful. But the only thing I liked about living in the city was the good roads. Lights on the trailer are 100% not working. But I hooked them up anyway, because you can't very well say they were working when we left if they're not plugged in. Pro tip. Almost there now. So after this, I've got to go to Walmart to pick up a grocery order. And I've got to go to Metro, which is another grocery store, to pick up the stuff they didn't have at Walmart. So it's kind of occurring to me that I'm not going to have much time left with this. So I may as well start with some questions. I don't have them right in front of me, but I certainly remember Grim's question. Grim, you're talking about scalping. Nothing wrong with scalping. I think you're still talking about going for that 1 point though. I do have a problem with that 1 point thing because it's just too tight. Again, if it works, great, but it sounds like it's maybe not working that great. Like I said, the 1 point is a separate aside. Now you're talking about, should you just cut back to trading with one position until you see how you can make it work? Absolutely, I would say. If you're not making money out, there's no need to lose more than you have to, you know? So I would just trade with one. Honestly, my advice would be just go to one contract, one micro, just trade the minimum, and do what you can to make that work. I have traded with a runner like that before. I was able to make it work sometimes, but I don't really like it. Just for me, I think it doesn't mean it's not going to work for you, but it never really worked for me because I would much rather just be in and then out. And the main reason is when you take a loss on both positions. And then sometimes you get a whole lot of winners on your one position and the other one comes back to break even. So if your stop and your targets are equal, you already have to get 2 wins for a loss to even break even. So if you're still getting your feet under you, I would say just try one position. Go for a little bit more for your target. Allow a little bit more for your stop. Don't take a trade unless your risk reward is good. Whether you wind up taking that entire reward or not, that depends, but you got to have it there. If you're going to risk 4 points, it's got to be an 8 or 10 point target there minimum that realistically could get there. If it only gets 5 points on the way there and turns around, well then take it to get out. Don't feel bad about it. Try to make it go over to one contract before you start adding extra. And really, to employ a multi-contract strategy, it's not going to work if you can't make money on one contract. In demo, until you get something that you think works, and you're ready to try it live, try it in a micro, don't put any real money at it until you know for sure it's working and it's going to keep working. Tim had a question about what indicators I use. A lot of people ask me that. Nothing super fancy, to be honest with you. You'll see on all my charts, I have Keltner channels. They're set to 2.5 I always say 2.5 standard deviation. It's actually 2.5 times the average true range. So that's the settings on it, off of a 20 exponential moving average. So in the middle, there's a 20 EMA, and then the top and bottom lines are 2.5 ATRs away from that. And what I like about that is it contains about 95% of, the regular expected price action. And if it goes to the edge or outside, that's something that's not quite normal, and I want to maybe look at it. And the oscillator on the bottom of my charts is the 310 oscillator. That's something made popular by Linda Raschke. There's a couple reasons. I'll glance at it, and I'll go over that in a video at some point, but for the most part, it's just there for context. Same as the Keltner channels, just there for context. They don't get me into or out of a trade on their own. They just might help me to confirm it or not. Here we go. Push had a good question today, talking about expiry and that sort of thing for futures. And technically, if you hold it past the expiry, you could have to take delivery of like 5,000 ounces of silver or 100 ounces of gold, whatever. That can technically happen, but it doesn't happen as a rule. Certainly not if you're intraday trading. The way that works, though, is there's a day called the first notice date. That is published on the CME website for all contracts, and at that point, it can technically be deliverable. Well, this video is clearly not going to be uploaded for 6 o'clock because it's after 6 now. Done dinner and heading to the second grocery store to get the stuff the first one didn't have. Anyway, get back to Bush's question. In theory, you could get in trouble if you held past first notice day, but in practice, it never happens. And I think really as a retail trader, I don't know if they would roll it automatically for you. I think they would at least call you and be like, you're still in a contract. Do you feel like settling for 50 units at the S&P, or do you want to get out and roll? Anyway, not going to be an issue for people that trade like me because you're not going to hold anything overnight ever. But we're on the June contract now. Okay, we're into May. Getting near the end of May, I'm going to watch the volume. Sierra Chart's going to send me a reminder anyway. I generally never roll before I get that reminder, but once I get it, I start looking at the volume. Whichever month has the most volume, start trading on that. Then you're good for another 3 months. So, pretty simple. So guys, it's a little bit of a different video this time. It's about, it's almost midnight right now, and I've just got the video edited up till this point. And so I just thought I was really determined to get one out today. I said I was going to do it, and I missed yesterday, and, it was just like, I just wanted to get something out for you guys, answer a couple questions. And I did take a trade earlier, which, of course, my audio was not turned on. And I was so spontaneous, I just sat down to take a quick look at the market in between my chores, and I didn't think to check and see if that was on. So anyway, it was just a little trade. Price had already come down, hit this low, and then it looked like it was going on its way back up, and it got up to 90. It was around a little after 12, like 20 after 12 or something. So it was between these candles here. It went up a little bit above 90, came back, sucked back to 90. I got in, I think, at 90 and 25 cents, trying to take it up to 4,100. It went sideways for a little bit, eventually went up there. Now, what I'm going to do is a little different today. It's midnight. A lot can happen in the London session. We could wake up and it's down here. We could wake up and it's up here. We don't know. But if it were to stay sideways all night, like if it were just going to be sideways the rest of the night, and wake up in the morning, it looks pretty much like this chart, except this is longer. Well, let's look back at the daily. Our ever-long uptrend is still intact, I would say. However, this is significant. All right. Now, what is also significant is this is today's candle, or Wednesday's candle. Now, look what happened a couple days ago. Came down close to 20. Today, it tried, but it couldn't get below 50. And on top of that, it came down, but it still closed pretty high. Anything can happen. It all depends on price action. But for me, right now, walk into tomorrow, I'm looking for a way to get it up to like 41.20, 41.50, something like that. Doesn't mean I won't take a short trade if it presents itself or if things change between now and then. But the way I look at this, on a broader spectrum is, to me, we're sort of due for a green candle. I'd be looking for a way, if it were to open right here and it went sideways all night, see that it's going to hold above 4,100 and then look to take it to 20 or 50. And if it just floats around and it's drifted below and it shows you that 4,100 is going to hold as resistance, look for 75, 80, or 60, even down to 50. So that's kind of the broad way that I look at it, and look for the actual price action itself to tell you when you can get in. But to me, we could well be coming back up to equilibrium. Even if we look at the daily chart, if this candle here were to at least get up to our mean, that's up at 41.50. That's a really likely place it could go. So anyway, that's what I'm looking at for tomorrow so far. Anyway, guys, that's it for now. I got to get to bed so I can have a clear head in the morning. Thanks so much for watching. I know today's video was different, but, is what it is. Let me know what you think. Questions and comments down there, always welcome. My mailing list is down there. It's free. Sign up if you like. And thanks so much for watching. And we'll see you tomorrow. Or I guess see you later today by the time this is posted. I think I'll set it to post at like 8 a.m. or something. Anyway, see you guys soon.